Well, hello and good afternoon. Welcome to another session. Today's session is going to be on reconciling for the treasurer. So same things are going to go as we've been doing. At the end, we will have some Q&A. We'll turn your cameras or give you control so you can turn your cameras on and unmute your mics. You can talk in the chat box also. Through that time, we will read those aloud. This is the only training we have this week for treasurers. We will have an additional training next Tuesday on the monthly uploads for Gateway. And then the following Tuesday, January 26th, we'll go over the supplemental annual financial report. So there's some good stuff going on this week, so keep a lookout. We have also put up all of the recordings from last week on our website. It is all under January session. So when you click the plus next to that, it will do an accordion style menu. We're putting them in order. So you'll see packets, and then as soon as the recordings come, those recordings are put right underneath the packets. The current packets for this week are at the bottom in January because we haven't done those recordings yet. So we'll just keep putting them on down the list. But next week, where the packets are now, you'll also see another link to this recording so that you can go back and rewatch it at a later time. Saying that, I think we're ready to get started this afternoon. We are very glad that you've all tuned in, and I'm going to turn it over to Lori so she can talk about reconciling.
Okay, I'm going to share, I hope. Maybe.
Good.
Is it right? Okay, let me start there. Is that right?
Yeah, flip it.
Flip it.
Swap it. I think it depends on where it's last time you
always the
opened
same
it.
place. You know me. Whoop, that didn't do it. Okay.
There you go.
Is that right? No, it's
Yep.
not. It's both. No, because I've got it both in the same. So I don't
it's
have
right on this side.
I know, but it's not what I want to do. So where
okay.
am I? I'm going to try it again. Okay.
While you're doing that, I do want to tell you guys I did put the link to the packet in the chat box. If you can't see it because maybe you've joined later, I think I put it in there right at 1 p.m. If you join later, just send a chat box message and I will put the link on there again. All right, it looks good on this end, Lori.
I am just it's not giving me the screen I want on my end is my problem.
Is it popping up on one of your other screens?
I've got the same on both, so it's duplicating instead of extending, and I don't know how to fix that. Okay. Now I need to flip it. See if I'll do it right this time. Swap. Is that right?
Yep.
Are there any boxes?
There are several. There's Big Box, which I think is me. I'm kind of in the center on the right. Yep, I'm gone. There's one down the bottom right-hand side, too.
That's me. Okay, I'm moving me too.
There's a couple at the top, but one is your sharing screen, and I'm going to guess that logo square is your Jabber, maybe?
Oh, I did not log out of that, did I?
That's okay. I just pull it to the side and go for it.
You can see the rest of it anyway. Okay.
You can.
Get started on this. Okay, the topic today is reconciling. Oh, can you repost the link?
I got it. You go ahead.
Okay. The topic today is reconciling, which is extremely important. It's why we're doing this first, because it really supports everything that you do in your office. We just can't emphasize it enough. And there's nothing worse than getting out of balance for a long period of time, because it's just so much harder to get back in balance. So again, it's really, really important. There are things that you need to do daily. There are things that you need to do monthly within your office. And so it's very important that you keep in mind, as the treasurer, that reconciling is an extremely important function of your department. And click over here. Okay. You can thank the little wonderful little pictures and everything that goes on this to Ricky, because if I were doing it, it'd still be the white box that it was originally. So I left all of her pretty stuff in there, but don't get your expectations too high when it comes from me, because I'm not very good at this, but we'll enjoy them today. So as I stated, reconciling needs to be done. Some reconciling you need to do each day, and that we have on the slide the cash book. There's some reconciling that you're doing each month, and that's your treasurer funds that you're keeping track of to the auditor's funds ledger, as well as your cash book as a whole on the last day of the month to your bank and investment statements. Okay. We did discuss in the session that we did on working together with both the auditors and treasurers that excise tax needs to be reconciled at least monthly as well. And we're going to do some future training on that. I didn't include that in this as part of it, but I didn't want to disrespect it and not mention it, because it is something that does need to be reconciled as well, but it's not part of this reconciling that we're talking about today. Okay. So daily, your cash book itself must be reconciled so that the left side, which is all of the charges for which you're responsible, matches the right side, which is all of the credits. And I'll go over a little bit what I mean when I'm talking about that with the cash book in a few slides. Then at least monthly, the treasurer's record for the receipts, disbursements, and balances, and you are keeping a separate ledger from the auditor for all of the receipts that are quietest in, all of the checks or electronic disbursements that are made out, and the balance that you're showing for each fund, and you're going to compare that to what the auditor's funds ledger is. This is a check and balance for that funds ledger. As we said earlier, the auditor's funds ledger is the official record for the county. It's the basis for the annual financial report that's loaded on Gateway. But what your funds ledger does is you're tracking the same information, the receipts, the quietuses, and the disbursements by fund. And so it's a check and balance against that. And each month you need to reconcile the two together to make sure that your records are accurate and complete. There can be an audit finding if you are not reconciling, and it ends up being on both offices, because it's something you have to do together. And finally, the cash book, which is going to be the record of all of your daily collections, your property tax collections, your other collections that you hold until settlement, your funds ledger amounts that, again, you're reconciling to the auditor. All of those combined together, which is the left side of the cash book, is the total amount of money or charges that you're responsible for. And this has to be reconciled to the bank. And what the bank does is provide you with all of their depositors with a statement that says this is what we show as the bank activity for the month. That is the bank statement, okay? And so when you're reconciling to the bank, you're looking at what the bank is saying. This is what was done with your account, with the money that you entrusted to us. And you're comparing that to what you're showing you did, what deposits you made, what checks you wrote, to make sure that you agree, okay? What the bank statement does by reconciling is support. So if you are in agreement with the bank and the balance is in agreement with what your adjusted bank balance is in agreement to what your record balance is, then you're supporting the amount of money that's in the funds ledger. It's in the county treasury. So not just the funds ledger, but all of the money that the county treasurer is holding. So I often ask, why do we reconcile? Well, one reason is there are statutes on maintaining a balanced cash book and on reconciling, and we've listed one of those statutes here. This is the Indiana Code that talks about the responsibility for the cash book for public officers. This is all public officers that have received cash, and the treasurer is probably the most active of all of them, but it certainly includes you. The cash book is the ledger for the treasurer's office. We will go over the parts of the cash book, and again on later slides to illustrate this. But the format of the cash book is that each day it has a page. Each page is divided into two sides. The left side is the ledger of monies collected that have yet to be receipted into the auditor's ledger, plus the funds ledger, which equals the total charges for the day. Okay. The right side of the ledger shows all deposits and warrants made that day to the bank, to the specific banks, plus any investments held, plus cash drawers, which equals the total credits, where that money is located, in what bank account, in what investment, or has it not been deposited yet, or is it in your cash change fund? At the end of each day, the total charges on the left should equal the total credits on the right. And this is what the statute means by balance. For every dollar you take in, you must post that dollar to the left side of the cash book in the proper classification and to the right side to show where that dollar was deposited or was invested. So here's some more statutes on reconciling and the compliance criteria for that. So in Indiana Code 5-13-6-1E, which is the first statute on this slide, all local investment officers, and that includes the treasurer, shall reconcile at least monthly the balance of public funds as disclosed by the records of the local officers with the balance statements provided by their respective depositories. Just what we've been talking about. Your record balance has to be reconciled to the bank statements and investment statements. Also, in our uniform and accounting and uniform compliance guidelines, which is uniform compliance guidelines that SBOA issues in your county treasurer's manual, it does remind you that at all times your manual and or computerized records, so your software records, your subsidiary ledgers, your control ledger, and reconciled bank balances must agree. If the reconciled bank balance is less than the subsidiary or control ledgers, the amount needed to balance may be the personal obligation of the responsible official or employee. So at all times, you have to be able to show that everything that you've posted, so all of your balances and all of your funds, your property tax collections and other collections, is where it is deposited in investment. And if you are what we call cash short, where your records are higher than what's actually in the balance, you can be personally responsible for that. So it is utmost important that you reconcile regularly and make sure that those balances always agree. So the cash book is the financial record for the county treasurer. So this includes the total of the county funds and your property tax and other collections that you're collecting that have not been pulled into a county fund yet. They're still just held on the cash book. Okay. So the credit side or right side on the cash book, which is where you're posting what activity you've done to bank, what bank did you deposit it in, what bank did you write the check against. These will not match the bank records for that specific day due to timing differences. The deposits that you post on the cash book today may not actually be reflected in the bank for today, especially if you make a deposit towards the end of the day. The checks that you issue on this date are not going to clear the bank today. It may take weeks, months, or even longer if you've checked your outstanding checklist for some of these checks to clear. So your record balance, your cash book, that final column, and we'll go over that, is not going to match what the bank says you have in the balance on any given day, and you don't want it to. Don't try to make it do that because you're going to be posting things you should not be posting. It's going to make reconcilement a whole lot harder. So the cash book is your record of what you've deposited to the bank, not the bank's record. And we'll talk about it when reconciling, how we identify those timing differences. And once we've identified all those, you are reconciled. That does not mean they match exactly. It means you can identify the timing differences. The charge side, or the left side, above the funds ledger, is only used to hold the monies until they're transferred by quietus to the auditor's ledger. The treasurer should not be holding on to money indefinitely here. All money is to be quietus into the auditor's funds ledger at some point. While settlement is that big transfer twice a year, when you take your property tax collections, your excise collections, your sewer liens and things that you've collected, and you quietus them into a settlement fund, and then those get dispersed, that is done through the auditor's funds. You are not writing checks. You are not paying off of the cash book. The money has to be moved into a county fund to be paid. When you receive money for wheel tax, surtax, innkeeper's tax, for example, those are supposed to be quietus in as soon as you receive them. We realize that sometimes there are some differences between the offices, and you post them to your cash book to hold just until you can get that quietus done. We understand that. It's not necessarily going to be exception as long as you have controls in place to make sure that does get moved in and does get distributed properly. But you need to have internal controls in place. They should not be held for long periods of time. So it's kind of, we started talking about internal controls. For Ricky and I, this is one of our favorite topics. We can talk till you are fast asleep, I'm sure, on the topic of internal controls. We will be addressing internal controls in almost every training that we do, not only because we really, really think they're important, but we want you to start thinking about them whenever you're thinking about issues within your office. How are internal controls going to affect this? What are the risks? How do we move forward? So I'm going to do a little brief tutorial on internal controls. We have training on our website. We have a YouTube video you can watch on internal controls that goes in more detail on this. And we certainly encourage you to do that. In fact, by statute, if you have not already done so, you need to watch that or do some training on internal controls and certify that. But there are 5 components of internal controls. Those all have to be present and working in order for internal control itself to be effective. So your control environment is the tone at the top. At the county level, this often comes from the attitudes and policies of your governing boards. But as an elected official, you are the leader of your office, and your attitude and wanting to maintain integrity within your office, including expectations of accuracy, are very important. Expectations that your office records will be accurate and reconciled is part of the control environment. Risk assessment is where you review the current policies and procedures in your office, and that's what you're doing, start doing this month as you're moving into the office. What are the policies and procedures? What work? What doesn't? What do you need to change because of new personnel or as you get new software? So risk assessment is where we review your current policies and procedures, determine if they adequately address the risk that you have determined to your financial records. And so, for example, for reconcilement, the risk is either that you aren't reconciling or that you're not completely reconciling. Either you're not reconciling at all or your reconcilement isn't accurate. And so you want to put controls and procedures in place that reconcilement is done every month, that somebody is reviewing that to make sure it is done accurately and that the information is correct. If reconcilements are not done daily and monthly, as we have discussed, the risk that undetected errors exist increases significantly. It also opens the door to fraudulent activity. If nobody's looking, and people know that nobody's looking, it encourages the kind of behavior of where misappropriation, where theft can occur. If you aren't balancing and reconciling, you won't know if there are funds missing. So once you've assessed the risk, you have to establish control activities to address that risk. As we've listed on here, segregation of duties and reconciliation are 2 controls that address the risk we are discussing here, and they are very, very important. Once you've established these policies, you need to make sure that those policies are provided to all of your staff and that you support your communications, so your financial reports are accurate, your monthly financial reports are accurate. We're going to discuss those at the end of this session. And finally, you have to monitor that your controls are being followed. Stating that the reconciliation will be done each month is not sufficient. You need to have some policies, procedures in place so someone is reviewing the process and that actual reconcilements have been done, and that they trace back to the source documents, the ledger, your cash book, the bank statements. All of this leads to an internal control structure that provides assurance that your objective, which is your operating procedures, your reporting, which again, your monthly report, financial report, and compliance requirements, which we've talked about, some of the compliance requirements in the statute are met. So for reconciling, we're going to focus on reconciliation policies and segregation of duties specifically. Segregation of duties is one of the gold standards of good internal controls. When you segregate duties, you make it harder for one person to initiate, approve, deposit, or issue checks, post records, and reconcile those records. When one person has the ability to do all of that, errors that are made are much less likely to be discovered because no one finds their own errors, usually. And if that person decides to misappropriate funds, they have the ability to do that and to cover their tracks because they're the only ones actually looking at the process all the way through. Segregation of duties between the auditor and the treasurer is written into Indiana code. So the statutes are listed here to show where that segregation of duties is. The treasurer receives the money while the auditor posts the receipts. The treasurer authorizes the dispersals only upon warrants issued and attested by the auditor. It takes both offices to both receiving and dispersing. Both signatures have to be on the check. Okay? You have to reconcile your funds ledger. These are all ways that both offices work together to make sure that the financial records are accurate and complete. So the receiving and dispersing responsibilities are split between the two offices. It's very important that this segregation of duties between this office be maintained. So we sometimes get questions about, the two offices helping each other out, which is really great for, we always like to see that, where people are working together, but it's something you want to be extremely careful with when you're talking about employees of the auditor and treasurer. They should not have access to all the way through the software. They should not have the ability to start a claim, attach a signature, print a check, put both signatures on it. Those have to be segregated between the offices, and one person should not have access to both of those parts of the software. Okay. Then within the office itself, so within your treasurer's office, it's also necessary to institute segregation of duties. For example, the collection process. You don't want one person to be able to collect the funds at the counter. They're issuing the receipt, they're balancing the cash drawer, they're making the deposit, they take the deposit to the bank, they post the cash book, complete the bank reconcilement. So they're going all the way through the process of collection for the same reasons that we just discussed. That is not good. You need to break up those duties, and you need to have approval processes along the way. Even with a small office, you can institute reviews and approval processes so that the cash drawer counts are double checked, that the person making the deposit is not the one posting the records and reconciling. And the treasurer, as the head of the office, should be instituting segregation of duties between cash book and bank reconcilement and reviewing all of these processes and making sure that everything is being done accurately. So Form 47 is the prescribed form for the cash book. In your office, you probably have an electronic version of this form. We do have the manual form. It's big. If we were doing it in person, I would have brought it along to show you, but it's about the size of a desktop. And again, one page each day. There's a lot of information on that. And I'm going to go over an electronic version of it so you can kind of see how it's laid out. Most of your electronic ones probably follow this as well. So again, on the left side, in the top section, you're going to have your tax collections. These are recorded at the top. They're quietest in its settlement twice a year. And the columns show what these are by taxing districts, so your townships, your cities and towns, etc. And then it's going to show a balance forward from the day before. It's going to show, the next column is going to show your day's transactions, so what was added to that. And then you're going to have a running balance on each day of what is collected by taxing district. Underneath that is a section on other sources. These are recorded, and they're very similar to the day's collections, except they are, again, other sources. Excise tax that comes from Department of Motor Vehicles. You also have excise tax that comes from the state airline and boat. Sewer liens is another example of other special assessments that you collect and you hold in that other sections until it's time to settle that money. And then the third section has the funds ledger line. And that is a summary. That's a total of the funds, not by individual fund, but the total of the amount in the county funds. And this is what you are agreeing to at the auditor's office. You total those three sections together, and that's your total charges. On the right side, you're going to have your depository. So your demand deposits are going to be at the top. Those are going to be checking accounts, savings accounts, money market funds, things like that. Those are the ones that you can put the money in and you can demand. You can write a check against that or move the money out the next day. Then you have the second section is going to be your investments. And this is money that you're holding for some length of time. So these are your CDs or your long-term investments. And I mean by long-term, anything from 2 months to 2 years. At the bottom of that is the cash drawers. So how much money you have in cash funds, because you're going to keep a certain amount in your office to make change. And you're also going to have, on any given day, you're going to have what you've collected for that day that has not yet been deposited. Okay? So again, your charges on the right side should equal your credits on your left side. If your cash is short or long, you need to investigate why. If this is an ongoing issue, you maybe have a weakness in your internal controls, need to be adjusted. Everyone is going to have a day where they might make change wrong, for example. But if it's an ongoing problem, you need to look at what is causing that problem and make adjustments. For example, if someone is really bad at making change, this may not be the best place to put them at the counter. Maybe another job that they might be better fit for them. So make sure you're looking at your resources again, assessing your risks, and making your procedures and controls to compensate for any weaknesses. When you're making investments, you can make investments from all of the funds that you have, a portion of all funds collected, or you can invest an amount in a specific fund. For example, you might have a capital project, and the county is a capital project, it's issued bonds, and you've gotten the bond proceeds into one of your demand accounts, but they're not going to be needed for maybe 2 or 3 months because the time to get that project up and going. And so you might invest those bond proceeds in like a 60-day CD or something to earn some interest until that time that you need it. And that's a situation where you're investing a particular fund, that capital project fund only, as opposed to where you just say, I have this amount of money in my demand accounts and I'm going to invest 10% of it in a CD or another investment. All money should be accounted for. Even if you invest money, it remains on the cash book in an investment. It doesn't go off the books. Make sure that every penny that you are required to account for is accounted for on your cash book. Okay, so I'm going to go over a little bit of an illustration of what we've been talking about by looking at an electronic cash book. Again, it's a big form. It's going to take me a couple slides to go through this, so bear with me on that. Hopefully by now you've all seen the cash book because you've been in office for a couple of weeks, so you've had a chance to look at it. So this is the left side and this is the very top, and this is what I was talking about for your tax collections. And these are just made up numbers. These don't relate to anything, and that's why we've got, instead of townships and cities and towns and other taxing districts, we've got colors here. But yours is going to break down by your taxing districts. This collection is going to be tracked by your billing software. So you're going to, as your people are at the counter receiving that in and they're posting that to the tax duplicate, that tax billing software is going to be counting where in each tax district it's collected money. And so what you post to your cash book should be supported by a report from your tax billing software. And there should be some report that it does that summarizes the day's collections by taxing district. So you have the information you need to report that. We come into audit, we can trace back that reporting back to that source document. Okay. So in this, and again, I guess this is Pleasant County. So if I live in the town of Aqua, which is the first line on here, I will have tax rates levied by my county, my town, my township, my library, my school district that all go into, that are all applied to my net assessed value for my property. Everyone that lives in Aqua is going to have that same tax rate applied to their net assessed value. And when I come in to pay my property taxes, the total amount I pay is going to go on this line as coming in from the town of Aqua. At settlement, the Treasurer is required to certify the total amount of collected within each taxing district. You turn that information as a 49 TC, and you'll get much more information on settlement from the Auditor of State's office. I'm just kind of doing a high level on here. But you're going to certify the amount that's been collected over to the auditor. They're going to work through their workbooks and worksheets in order to determine how to settle it out. As I said, my tax rate is going to go to the school, it's going to go to the library, it's going to go to the city, it's going to go to the county, and so that has to be determined through settlement, where you take the money that's collected and certified and distribute it out. So this section does need to be posted accurately. You have to know where that money, what taxing district that money was collected from. Oops. I'll carry it away there. As I said before, the part in purple is carried forward from the day before, so that's the balance that you're carrying. The day's collection is in column 3. This one actually has additional columns for the type of, whether it's the day's collection or lockbox or escrow. Column 4 is where you're going to reduce the amount that you're carrying, that balance, by the amount that you're quieting in. So you're going to use that as settlement. You're also going to use it if you do an advance of taxes. And then under the property tax section, as we talked about the other sources. So again, there's special assessments in here. There are excise taxes that are collected. Most of that in there, so you can see that. Sometimes you're going to add a category to here to temporarily carry some collections that probably should have been quieted in. Make sure that no funds get stuck in here. This is what I was talking about. If your innkeeper's tax is quieted in less often than daily, you may have a line here to hold that until you get it quieted in. Just don't let that money get stuck here, because it can't get spent here. It can't get spent until it's quieted into the county fund to be distributed. Okay, and again, this section has a beginning balance, your day's collections, and a running total in the last column for that day of what you're carrying in each category. And under the other sources section, where you see that first arrow, that's your funds ledger line. So that's showing the total amount that is represented by the funds ledger. This is what the county auditor is in keeping a detailed record of. So this is your general fund, all of your special revenue funds, your debt service funds, your capital project funds, all of the county funds are represented in here. When you quiet in money, we talked about from property taxes and from other sources, you add it in here, and that's put in a settlement fund that will then be dispersed from that fund. So at the bottom of this form, with this second arrow, it shows the total of all 3 sections together. Okay, and that's the number that has to reconcile to the number at the bottom of the left side or the right side of the cash book. So here's the right side at the very top, and again, these are the demand deposits. These are your depositories, your checking accounts, savings accounts, etc. Again, there's a beginning balance, and then anything that you've made a deposit for that day, you're going to post those deposits. Even though you're taking them to the bank, you're posting that that's where that money is going. As you're writing checks, those checks are going to be posted. Maybe it's your payroll fund, and maybe it's your main checking account. But as those checks, you're going to go ahead and issue those checks, then the amount of those checks is going to be posted as warrants that are issued against that. If you make any transfers between your investment and your demand account, that's taken care of in here to show money that you may take out of a demand account and then show it as an investment in the second section. So the final column is what I was talking about earlier. This is your record of what you've put in each account. This is not going to match a bank balance. If you went to an online bank record and you pulled up, the date for December 30th, 2018, on that, it's not going to match exactly, because they're not going to have the day's activities posted yet, and you don't want it to. This is your record of what should be in those bank accounts. Okay. The next section is the investments, and you're going to post your investments here. You're going to post them at the cost. So if you put $1.5 million in a CD, then you're going to put $1.5 million out of your demand account into your investment account. You're going to leave it in here until that CD matures. Okay. And then the final section we talked about, you're going to have your money in your cash drawers. You're going to have receipts that you haven't deposited yet, and what deposits you're making. And there's a reconciliation for the cash, and at the very bottom, where this arrow is, that's the number on the right side that has to match that number on the left side. Every day, those 2 numbers should match, and that's something you're going to be doing. Go that fast. That's something you're going to be doing every day to make sure that those 2 numbers match, and that's balancing your cash book. So the first reconcilement that you're going to do at the end of the month, And you can do it more often. We highly recommend you do it more often, but at least monthly, you need to balance your funds ledger to the auditor's funds ledger. So again, this is a system of checks and balances which enables both of the offices to find possible errors that have occurred. There may be in a receipt or disbursement that has been posted twice or not posted at all. Working together, you kind of ensure the accuracy of both records. If you have a variance and you research it, you find out what it is, determine where the error is, and whichever office needs to make the correction will make the correction. Working together helps ensure the accuracy of these records. So it's really, really important that you get along and that you get this reconcilement done. Your office will then be taking the next step to reconcile your cash book, which includes this funds ledger amount, to the bank and investment statements. Okay. When we come into audit, we're going to take the auditor's record, which is the auditor's funds ledger that they've used to make their annual financial report, and we're going to compare it to the bank and investment statement. We're going to work with you, obviously, to find any of the timing differences and identify those. But those two have to match in order to support the opinion on our independent auditor's opinion on your financial statements. So it's not enough for your cash book to reconcile. If your auditor's funds and treasurer's funds ledger do not reconcile, you're still going to have an issue during the audit. It's very important, the opinion on the financial statement. What you want as a county is you want us to have an opinion that the financial statements as presented, which is in the annual financial report, are materially correct, and they represent the financial situation of your county. If they don't reconcile or the variance is significant, we're not able to identify it. That can affect our opinion, and that can affect your ability to get financing. It can affect your governing board's decision-making process. I mean, it has a lot of ramifications for that, so it's very important that you have very accurate records. So the process itself of comparing the two should have internal control functions, procedures that you work out together to make sure that it's being done, that it's being reviewed, that it has been done. So if you each of you assign a person within your office to work on this, someone else needs to be reviewing and making sure that the process has been done and completed, and that you've identified all variances. If you have a variance that is not identified, you're not completely reconciled. Okay, so all of the variances have to be identified. Okay, we've already said this, the treasurer reconciles the bank balances to the funds ledger for the county. To do this, you must start with the reconcilement of the funds ledger, because the total of the funds ledger plus the total of the items that remain on the cash book that have not yet been transferred by Quietus to the auditor's ledger would be the total ledger balance at the close of day. That's that bottom number on the left side of your cash book. It is possible on here, if you have done, it says like here, it says funds ledger, cash, fund ledger, investment. If you have done an investment by a particular fund, it might move out of this. If this is all funds, it might move out of it into a separate line. So if, like I said, that capital project funds that we used in a different, if it was different, but again, the total would still come back to the total we see here. It's just you might identify that it's a investment by funds only, and so it has a separate line on that. So we're going to talk about some of the timing differences. We said the cash book is your record balance, and there's going to be a difference between your record balance and what the bank is keeping. And these are due to timing differences, things like deposits in transit. You've made the deposit, you may have even taken the deposit to the bank, but they haven't posted it to your account yet. Outstanding checks. You've written the check has been issued, the person has it, but maybe they haven't cashed it yet, so it has not cleared the bank yet. Credit cards. If you accept payment by credit card, you're going to receipt it when a credit card payment is made, but it may take a day or two before the credit card company posts that money to your bank account. Interest and bank charges. Those are some things, transactions the bank often posts directly to the account that you don't know about until you get your bank statement. So they're not posted to your records yet. So that's a timing difference. NSF checks also become a reconciling item. That's when the bank notifies you that a check you've received has been dishonored because there were not sufficient funds to cash that check. So at all times, you have to be able to support the amounts that you're using, all of these identified things. You don't want one number that just says difference. You want to be able to identify what each of those differences is. And this is where we're talking about at the beginning. I said, you know, the longer it goes, the more difficult it is. Hopefully you're not finding this, but if you're coming into office and you find out that your predecessor did not reconcile every month, so these things start netting against each other, and you may have one number that is simply an unidentified variance that you're going to have to work on. Don't panic. It does happen. Your predecessor treasurer is responsible for that reconcilement through the end of December. You are responsible as you took over January 1st. So if you can come back to that number every month, so you know that you're really probably going to do your December 1st, but so you know that your transactions that you've been overseeing are correct and everything ties, and it's just that number. We will help you work on identifying that number and getting it corrected as much as we can. But again, you're not responsible for that, but you can't use that as an excuse to not reconcile yourself. You still need to reconcile every month. There are different ways for treasurers to reconcile because yours is much more complicated. And if it feels really awful, I did hear Kim say last week when they were discussing to you, she does 900 bank reconcilements a month, and you don't have that many, so be thankful that you're at a county instead of the state. But you can do one large spreadsheet where you do all of your banks together. You can do individual ones. Reconcile each individual bank account and then bring them together as a summary. It's what you're more comfortable with. There is no one way to do it. You may have, especially coming into office, you may find that maybe a field examiner's been there and left some examples of how they did it. Doesn't mean you have to do it that way, but it might give you some ideas. You need to find a way that works for you to be able to identify these variances and reconcile between what the bank statement amount is and what your record balance is, and we'll be going over that. Okay, so whether you're doing them, I have an illustration which I included in a PDF on there that we'll go over to kind of show all of this when I'm done, but I put these steps in so you can go back and look at them again when you're actually working on your own. So whether you're doing each bank separately or you've got all your bank accounts totaled together at the top, you're first going to do is trace all of your deposits from your duplicate deposit slip to the bank statement for the month. You want to make note of any deposits that you made that the bank has not credited to your account. So these are going to be your deposit and transit listings. So keep track of those. Okay, most of them are going to be the end of the month, but there might be an error in there that you'll need to follow up on. Okay. You're also going to trace all the checks from your check register to what has cleared in the bank. Checks have up to 2 years to clear. So your listing of checks that have not cleared the bank, your outstanding checklist, needs to be updated each month and carried forward. And there are going to be checks on that for a treasurer, probably that are 2 years, 2 years or older, that need to be dealt with. Okay. So you're not only checking that, for example, if you're doing the December reconcilement, you're not only checking that the checks written in December, what have cleared and what has not, but all the checks written prior to December that had not cleared, that were on the outstanding checklist. Did any of them clear in December? So you're keeping that outstanding checklist updated and carried forward. Then look for anything that doesn't match your record. So if there is a check that cleared that you didn't write, you don't have on your check register, or outstanding checklist? Is it an error by the bank? Was it for another account that erroneously got put to yours? Is it a check that maybe didn't get posted to the records? And you go back and look and see, that was a check we wrote. For some reason, it didn't get posted onto our check register, or didn't get posted, so it wasn't included in the cash book. Is it a fraudulent check? Be sure and keep your eyes out for this. We have heard of people taking the bank routing and bank account information from an actual legitimate check and then creating fake checks that sometimes the bank does not catch, especially if they're for smaller amounts. Okay. However, just remember you have a short time to notify the bank to get these charges removed from your account, whether they're errors or fraudulent. So you want to make sure you're staying on top of your reconcilement for this purpose as well. We had not, it wasn't a treasurer, but we had an official that had not opened their bank statement for several months, just got behind. And so the fraudulent activity that had occurred 2 months before, it was too late for them to correct it. So the county then suffered a loss because that money was taken out of their account and should not have been. So stay on top of your reconcilement, stay on top of what's coming out of your accounts. And again, with online banking, you can check that daily or weekly. And as Kim suggested last week, you can also use positive pay. It may not be, you have to do a cost-benefit analysis, so the cost of positive pay may not be beneficial for every account, but for your checking accounts, it might be worth the money to prevent these kind of fraudulent checks from getting through. And if you find posting errors, those need to be corrected immediately. Once a posting error is identified, there's no reason to continue to carry it as a reconciling item. Sometimes that means getting the auditor to correct the funds ledger so you can make sure you have procedures in place for that, and communication, and document what you've done to that point. If you've identified it as something that needs to be corrected on the auditor's funds ledger, keep track of when you notified them of what you agreed on. And then if they fail to do their part, you've at least got documentation that you were communicating, that you were sharing that information. We really don't want to see 6 months worth of posting errors that just keep carry forward month after month. If it's a posting error, it needs to be corrected. So what are the common variances between the bank statement amount and the cash book amount? Interest is a common one. If your demand accounts earn interest, it's usually just added to the account at the end of the month. You've not posted it because you don't know what it is until the bank actually calculates it and posts it to the account. So you need to quietus in that into the general fund unless your investment policy directs it to go to another fund. But that's going to be a variance then on your bank statement because you haven't posted it yet. That variance is then resolved by posting the interest. Okay. With investments, this can be more problematic, which we're going to have to do more training on investments. But you have to know when your investment posts the interest. So no, we're not talking about earning interest. It can earn interest every day as long as you hold it. When they actually post that interest, it might be monthly, it might be quarterly. So if you're holding something for a year and it posts interest each quarter, then each quarter you need to quietus that interest in and increase the carrying value of that investment. Okay, so if you posted, the CD, or not this, it's a CD, 1.5 million, it was a year, and in 3 months they give you $10,000 interest, they wouldn't pay you that much. But if they did, you need to increase the carrying value from 1.5, let's say 1,000 might be better, so 1.5 million, $1,000, and then the next quarter it might be 1.5 million, $1,500, depending on what the quarterly interest is. But with investments, you have to understand what your investment is and when your interest is actually posted. Okay, we already talked about deposits in transit. Again, these are deposits that you've taken to the bank that the bank hasn't credited to your account yet. And outstanding checks, again, are those checks that you've written that have not cleared. Bank fees are often taken out of your account. You have not posted those expenses to the record yet. Bank fees can be netted against interest each month if your interest is higher than the bank fee. But if not, then you need to have a claim for that to show the expense of the bank fee. Adjustments are those things that then you need to correct. So posting errors, we've already talked about those, need to be corrected as soon as they're identified. Bank errors, those need to be taken back to the bank, and they need to make sure followed up that the bank corrects any errors. If they took money out of your account they shouldn't, or posted something to your account that was really not your transaction, then those need to be corrected. Okay. If an error is found and needs correcting, don't backdate. Post the correction on the day you do the correction. There should be an audit trail to follow. If you backdate it within your software, a lot of times it will just change everything back to that previous date, and all of your previous records are going to be out of whack. So make sure you don't post-date it. Post it as of the date that you make the correction. And if you have questions about that, call us. Again, you need to, if your receipts don't match your deposits, go back through your receipts and find out where the variances are. Do your research on that. Maybe your research weren't posted properly. Maybe something didn't make it into a deposit. If your disbursements don't match the warrants, we've already talked about that. Why not? Did you miss posting a check? Is there a check that cleared that shouldn't have been? All unidentified variants need to be noted. They need to be investigated. And once you've identified them, you know what they are, then you are reconciled. Make the next step to actually post the corrections. But again, if you have a variance that is not identified, it's just a dollar amount that you don't know where it came from or why it's off, then you are not reconciled. And again, thanks to Ricky. I'll let this for a few minutes, because if this is what you're feeling like when you're doing it, I'm sorry. It's really not that bad. Again, we want to stress internal controls. Remember that those controls, those policies and procedures help you discover errors that have occurred, and they protect your employees from being accused of anything, because you're finding those errors and getting them corrected. So after your drawer has been counted and reconciled to your applicable reports for your day's collection, someone else then needs to verify that the cash count is correct and that the drawer reconciles. Each cashier needs to have their own drawer. If you have more than one person working out of a cash drawer, then you're not going to be able to determine why the shortage or cash long would have occurred. So everyone should have, each person that's collecting money should have their own cash drawer. You need to make daily deposits, and that's to make sure that you're safeguarding those assets. They're less likely to be stolen if they're in the bank than if they're still sitting in your account or in a cash drawer somewhere in the safe. Make sure you have procedures in place to account for your electronic payments. So your debit cards, your credit cards, your ACHs. We're going to talk a little bit more about receipting with ACHs, and we talked a little bit about it when we were talking about working together. But make sure all of those things that you have procedures in place to trace those to make sure everything gets posted. So what is your end goal? It's that your collections equal your receipts posted equals your deposit. And then you get to do the happy dance. Believe me, I've done it before. Not where anyone could see me, but I've done it. There also should be internal controls over your disbursements. The treasurer is the custodian of the county fund, should be reviewing each payment or series of payments to determine if there is sufficient money in the treasury to pay these claims. You are not reapproving or auditing the claims. What you're determining is if X number of dollars needs to come out of payroll, then you have that money in payroll before you authorize those payroll checks. If money needs to come out of another bank account, that there is sufficient money to cover that check or that series of checks, the total amount. So make sure that you keep that in mind. You certainly don't want any county checks to be dishonored for insufficient funds. Okay. At the end of each month, once you're reconciled, before the 16th of the month, you are supposed to prepare a report showing at the close of business day and the last day the preceding month, everything that's pretty much in your cash book. The 47 TR is a summary of the 47, which is the cash book. This form you are supposed to complete. You give copies to your auditor, who then gets it to your governing boards. A copy comes down to us as well. But it's very important that this report be put together. Again, we have had calls from governing boards before. If they don't know, they need to have the funds ledger that tells them where this money is, but they also need to know that this is how much money they do have. So your financial report is extremely important for making management decisions for your county. So it needs to be accurate, it needs to be completed, it needs to be timely. Okay, before we go into questions, I'm going to end this and I'm going to stop sharing, I think. And I'm going to share, I hope. You can see this or not. Okay, so you should have a copy of this that was attached into your packet so you have it to look at. And again, these are just made up numbers. This is just to illustrate it. This is not the only way to do a bank rec. This is just one way, but it illustrates the process. So at the top, we have only 4. Obviously, Pleasant County doesn't have a lot of bank accounts. But you can list all of your bank accounts, or you could just list one and do a different tab. And do this for each individual bank account if it was easier for you, whatever works for you, because it's got to work is the bottom line. So this balance per the bank statement is taken right off of the bank statement. What does the bank say is in your account as of the date you're doing the reconcilement? So I've got March 31st, it could be December 31st, 2020, whatever date you're doing it. What does the bank statement show that you have in that account? Okay. And again, what is in your investments? And again, this can be done separately or you can put them all together. And then you're going to start identifying the differences between what is in your bank statements and what is on your cash book. So if there was interest that has not been posted, your deposits in transit, I said keep a list of that. Okay. The interest needs to be backed out. Because it's the bank credited, but we're trying to reconcile to your record balance and you're not posting that interest yet. So you're going to reduce the bank's balance, bank account statement balance by that amount. Deposits in transit you're going to add because your records show that you made these deposits. The bank just hasn't credited them yet. Outstanding checks is the opposite of that. Again, you've written, in this case, $33,208 of checks that have not cleared. So the bank is still showing that money in there, but you know, because you've written these checks, that money is going to come out of there. So you're going to reduce it by that. If you have a service charge, you're going to add that back in because you haven't posted that expense yet, okay, on your records. The same thing with an NSF check. If the bank did not honor it, but you have not voided out that receipt, so it's still on your records, and you're going to have to add that back in. When you've made those adjustments to the total in the banks and investments, you're going to come back to an adjusted bank balance. Here we added cash on hand, okay? So this is the total amount of your adjusted bank balance in cash. And you're going to compare that to your total charges. Your total charges is the left side of your bank statement. Your property taxes, your other sources, your funds ledger, and then if you had an investment outside of a particular fund that you had to add in, those two, but these two together is your funds ledger amount, okay? And when you come down and the variance is 0, and again, it's not always this easy because you're going to have a lot more of again, depending on how many banks you're doing and how many timing differences you have, you're going to have a lot more transactions in here. But this, again, is just to illustrate it. You should have a listing of your outstanding checks for each bank to support the total that you carry on this. You should also have a listing of your deposits in transit that have not hit to support this, and all should be kept with your bank reconcilement. If you have any issues, stop sharing, I think. So if you have any issues or questions with your bank reconcilement, again, it's not like we can, just wish we could wave a magic wand and fix it. But if you send it to us, we will begin to look at it and see if there's things that we might be able to point you in a direction. Not having all of the source information, and again, depending on how many months it's been since you reconciled, we may or may not be able to point you into to get you everything carried forward. There are solutions if you're reconciling to that unidentified variance that you inherited. If you're reconciling to that for several months in a row, it's significant, and it's not changing at all. So you know that your transactions for 6 months or 8 months or 12 months has not changed that unidentified variance. There are ways then for you to correct that on the record so that you're not carrying that forward indefinitely. But we have to make sure that there isn't something during those 12 months that might not change the amount in there. That's why you can't just write it off or adjust it in the first month. So give it back to Ricky, and you can throw it open for questions.
Okay. So I'm going to make you panelists, which then should give you control of your camera and your microphone. So if you'd like to ask any questions of Lori or I, this would be the time to do it. Or if you just want to say hi again. We like hi.
The radio silence.
It's radio silence. Is everybody just completely overwhelmed? No, right? No. It's the easiest thing in the world, right?
A funds ledger is going to depend on your software, but it's basically going to be a report that's going to have your beginning balances by fund, general fund, MVH, da-da-da-da-da. I mean, it's going to be several pages long. It's going to have receipts, disbursements, ending balance. That's your funds ledger. But it's going to
Lori said maybe slightly overwhelmed. Just a little
It is, because you're just getting in and doing this. But
it's fun, guys. It's like a puzzle. Everything has its place.
The answers are there somewhere. And actually, with enough time, you could find every penny. However, you're going to find that especially if you've inherited it, it's not worth sometimes the time to go back 6 years to find out where every penny went. But it's all there.
Got several thank yous. You guys are very welcome. We're hoping that these are all very useful and given to you in the time that you need it the most, instead of trying to overwhelm you all in one day.
And you can contact us at any time. If you're thinking about this or looking at it and something doesn't make sense, just reach out. We can talk about it and go over it again.
Like Lori said, if you can provide us something, if you email us and just ask us a question, we're probably going to be like, without information or being able to see something. So sending us support along with your question is very, very valuable and saves some time on your side as well.
I actually have a question.
Yeah.
I went to upload everything up into Gateway, and it says that it's different this time around. They're also wanting the bank statements. Mm-hmm. Are they wanting the whole bank statement for each account? Okay.
Yes.
I just wanted to make sure because I was like, oh, that's a little strange, but okay.
Yes, and we're going to go over this. I think you guys are next week with the Gateway.
Okay.
Make sure I tell you this. So on the 19th, I'm going to do a whole presentation on how to with Gateway, and we're going to talk about these uploads and the changes that were made and why and all that good stuff. But yes, the whole bank statement, please.
Okay.
You don't have to include the check copies. I should say that. If it has like what's the word I'm looking for? The canceled check copies, talking on the back, those wouldn't necessarily need to be uploaded if that would save. I don't know if it would save any time or not. But if it's already together and it's already a PDF form, just go ahead and upload it. Whatever's easiest. Anybody else? Won't let me move through people anymore.
Oh, wonder why not.
I don't know why. I lost my little arrow. I have an arrow
and they took it away from you.
It's like, you don't get to pick on these people. I'm not going to pick on you. Come on. But yeah, I don't have an arrow. I can't slide through everybody like I could before. Oh.
I do.
Yeah, I don't. And I lost people's names. Like, hold on. It's weird. I don't know. Technology is great. Okay. Well, if you guys don't have any further questions, we can let you go this afternoon. We appreciate you guys tuning in today. Just to kind of talk about it again, we know that this is a big deal for your office. And so, call us, email us. We can't stress that enough. We are here to help if we can. We can't obviously do the whole thing for you, but we can give you ideas of where to start, where to take a look at, and we can be in touch throughout the process if you need us to be, okay?
And if there's anything we talked about that we kind of touched on that you want to talk about in more detail, don't, like investments or something, if you're looking at them and that is causing you problems, we'll try to do more training in the future, but reach out to us. We have no problem. I didn't want to, go 4 hours and totally lose you in it, but more than willing to talk one-on-one on your specific situation. It might be clearer when we have actual, concrete examples of what you're dealing with.
Absolutely. Absolutely. Okay. Well,
thank you for listening.
Yeah. We thank you, and we hope to see you next week.
Yes.
Okay.
And in the
future. All right. Have a good afternoon, everybody.